Stocks up big on the day on Friday. Bonds and gold down. Let's jump into this market. We see the S&P 500 is a green spinning top, means lots of indecision, tending up. Derivative oscillators losing downward momentum. Price percent oscillator still heading down. Market still in a negative downtrend. We go from the weekly chart to the two-day chart. And of course, we have the prior candle that ended on Thursday the 3rd was a red spinning top, indecision tending down. But what we have seen so far the first day of this latest candle is the price percent oscillator move over, going up toward the red signal line. A derivative oscillator with all that up movement up 3.35%. It switched over to positive. But this is just the first day of the latest two-day candle. It won't finish drawing until Monday. See what really happened in the market as we delve a little deeper into the 4-hour chart. Now remember, we were waiting and hoping to see a crossover going down. We did not jump in because we were waiting to have it cross, and it did not do that. In fact, it was up in the morning and up even more in the afternoon. We still have a market in a downtrend. The two-day chart is still in a downtrend also, but we do not have a jumping in point. Now maybe as next week starts, we might see things roll over, or they might continue to go up. We're trend followers and we obey our rules, and that typically keeps us out of trouble. It darn sure did here, did it not? But remember, market's still in a downtrend. We're going to see how next week shapes up. So we go from the 4-hour chart back to the weekly, go into the Qs. The Qs up the biggest, 4.28%. That, of course, ended the week with a green, almost a doji, which means lots and lots of indecision. Tending up, it is a green, but again, derivative oscillator losing downward momentum. Price percent oscillator going flatter, but still heading down. Still price movement below the weekly trend line, so we're still in a confirmed down move. We go from the weekly to the two-day. Now that shows a little bit of a different story. Things have been sliding sideways for the last few days. First day of this latest two-day candle, we see a very close move to crossing over, going up on that two-day chart. Derivative oscillator is trying to go positive. Price percent oscillator might cross over on Monday. If it does, after this candle closes, then of course our down moves in the Qs will not be happening because we have to have both the two-day and the weekly moving in the same direction. So we go from the two-day chart to the 4-hour, up movement in the morning, lots more up movement in the afternoon. Derivative oscillator heading up. Price percent oscillator, which had been heading down, slammed back up. So again, did not have a crossover, did not have a jumping in point. And of course, those of you who weren't following our rules got slammed. And hopefully you weren't not following our rules. In other words, you were following our rules and you waited to do a practice trade. And again, remember, we're not a stock calling service. We are an education firm. We do not give stock advice of any kind. We go from stocks to bonds. Bonds down rather, 1.16%. Now we look at the weekly chart on bonds and we see things really moving up strongly on that weekly chart. 6, 7, 8 weeks now of strong up movement. Derivative oscillator gaining upward momentum. Price percent oscillator heading up. So bonds are still in a strong uptrend. What do we see happening on the two-day chart? Well, we saw where things had peaked really strong on that two-day candle ending Thursday, and we have a red open box candle. Now, it's not a strong down candle like we see in our Heiken Ashi candlesticks. That would be a solid red candle. This is a red open box candle with a wick on top, no wick on the bottom. Price percent oscillator is pretty much gone flat. Derivative oscillator has lost upward momentum, particularly in the afternoon. And we go to the 4-hour chart. And of course, we had a jumping in point yesterday afternoon somewhere around the 122 mark, something like that. And of course, what we had happen was things move over down. Now, we haven't had a crossover, but that might happen on Monday. Those of you who jumped in to any kind of up move on 20-year bonds, be very careful. Watch on Monday. You may have to pull that practice trade as things bounced around. Remember, bonds typically move inverse as a sort of a safe haven to stocks. When stocks are down, bonds typically go up. This is not a hard and fast rule, but it's typically the way things work because it's a safe haven. When stocks aren't doing well, as stocks popped up so high today, caused bonds to lose that upward momentum. So again, hasn't crossed over yet. Derivative oscillator still positive, but losing energy. Price percent oscillator heading decidedly down after super strong up movement over 1, 2, 3, 4.5 days. So be careful. Watch closely what's going on. So we go from bonds, lastly, to gold. Gold down 0.81%. And again, gold still decidedly up and ended the week with a nice strong up candle. Derivative oscillator heading up. Price percent oscillator heading up. We go from the weekly to the 2-day. Keep an eye on that 2-day. And of course, it has gone flat after many days of up movement. This is just the first day of the latest 2-day candle. It's a red, almost a spinning top, close to a doji, means indecision, tending down. We see the price percent oscillator has gone flat. Derivative oscillators lost energy. We go from the 2-day to the 4-hour. And of course, we had things cross over in the afternoon. We had told you to keep an eye on gold. Hopefully, after that down morning, you had taken lots and lots of virtual profits from the jumping in point way back at, what was that, 118.60, up to a high of somewhere around 122, and hopefully you jumped out somewhere in the afternoon around the 121 something mark. And again, nice up movement when that 4-hour chart crosses over. That is your getting out point. If you didn't make it out in the afternoon, then of course, keep your eye on things on Monday. Might find a pop-up Monday morning and might find a good jumping out point. Keep an eye on the markets, of course, throughout the morning and around that noon hour. Remember, be very, very careful around idiot hours, we call it, from 9:30 to 10:30 when the market makers are in control. Folks, that's where we are as we end the day on a very interesting Friday. And as we've finished our first week in the new year, we so appreciate you being with us. If you have any questions, problems, concerns, you can always write us cw@chartingwealth.com. If you haven't purchased our book, please do so. Returning from a trip this weekend, and we will be getting the latest orders out on Monday. And we will also be sending to the purchasers. We will make sure you get that quarterly chart training that we did for the fourth quarter. Same with our new Patreon members. God bless, my friends. Please, you can find all the ways to get yourself a book or become a Patreon supporter in the show notes. Take care from the whole team here at Charting Wealth World Headquarters.